Okay, so welcome back. I hope you had a good and productive weekend. We're moving on to a new chapter, chapter 12. And this is a bit in this. So, this is probably going to be a three-parter of a video. Okay, the first part's going to be pretty straightforward. And the next two after that will be, I suppose, economics. So, the first part is going to be kind of a revision of what you did in business studies. So, if you haven't done it, no biggie, it's not that difficult. So, this is fiscal policy and the budget. Fiscal policy referring to really what's the government going to do, what's the government's overall strategy and aim and values, based upon their own particular economic system and theory. All right, and we're going to look at a little bit of theory in the next session. Um, Kind of what theory they go with. Are they monetarist? Are they Keynesian? Etc. Whatever that means, and we'll talk about that in the next one. So this one really is pretty easy because it's something we've actually discussed before. It's just looking at the budget. It's looking at what the budget is, what are the different types of budgets you have in this country, and how are they calculated, and then what can the government do if the budget is good or bad, and we'll talk about those ones, deficits and surplus, everything. The first thing to know about the budget, and I know I'm conscious that some of you are doing accountancy, so you probably noticed already, is that the budget is something that is not, it's a future plan. When the budget is done, it's done for the following year. So the budget that we spoke about before Christmas was budget 2021. It is where every single department says, what are my plans for the following year, and what resources do I need to carry out those plans? All right. And then the government allocates money. Sorry, there's steps here. The government allocates money, and the person who allocates money is the Department of Finance, who at the moment is Pascal Donoghue. So this is all based upon what we think is going to happen. The budget is an interesting one. The budget used to be done every year, kind of at Christmas every year. And then really for the last couple of years, there's been kind of supplementary budgets. Maybe they might redo the budget in June, July, August again, because the world has changed so dramatically in the 9 months that they kind of need to go back to the drawing board and say, all that money that we thought we needed, we need more, or all the money we thought we needed. Actually, things have gotten a little bit easier. So it needed much, and they revised their plans based upon that. So you can see here on the right, really what you have is you have money coming in, you have money going out, and the whole job of the Minister for Finance, Pascal Donoghue, is to make sure either more money is coming in than is going out, or that it kind of balances. Okay, you don't want to run what's called a budget deficit, nor do you really want to have a budget surplus. So because then it means your estimates were wrong and your accountancy was wrong. So really, what every Department of Finance around the world want to do is they kind of want to run a balanced budget, because it shows you know what you're doing. I mean, if you've too much money or too little money at the end of the year, why is that the case? And that can bring down governments. So we're going to look at all these things on the right here: current revenue, capital revenue, current expenditure, and capital expenditure. Okay, just kind of going back to it though. This is a riveting read. I mean, if you really want to get into the nitty gritty of budgets, you can go on to budget.government.ie and you can just have a look at it there. If you really want to read what Mr. Pascal Donoghue read, you can do that. Okay, and we'll come back to some of these. Actually, we'll come back to some of these in a second. All right. So this first one is revenue. Where do you get money from? So the government has to get money in, and it spends money. So number one, where do you get money from? Now, it'll be no surprise to find that where the government gets most of their revenue from is from tax. The vast bulk of their money is from tax, and you know this yourself, but you should also know what are the main sources of tax, or the main sources of revenue from tax. And really, what you're talking there is PAYE and VAT. They're the main ones. And then for companies, there's corporation tax as well. So corporation tax is huge. If you have massive companies in this country, they pay tax on their profits, 12.5%. Indirect tax revenue is not straight from source, so it's not like that. There's something they can rely on. So, for example, an example of indirect tax revenue would be customs duties or excise duties from imports. So again, it's not something they can kind of plan. It's really down to how consumers' trends change. So you wouldn't call it direct taxation because it's not coming directly out of my salary. It's like it's something I choose to do with my own money, but then there's a tax on top of that. Okay. They also get profits from state companies. So again, where does the government get money from? If a state company like ESB is making money, they have to give in the form of dividend. They do loan out certain things to semi-state companies, so such as NAMA. I won't really get into the national asset management agency, NAMA will pay them interest, okay, if they give loans out. Fees charged for services could be like if you want to, I don't know, going to a bank or going to, you want to get a tax refund or you want to get a tax form. There's a statement, P21 balancing statement. Anyway, don't worry about it, I'll come back to it. And then say savings in central bank surplus income. So most of revenue comes from taxation. What else? So capital revenue, sorry, this is current. I forgot to mention this. Current is the kind of day-to-day stuff. Current revenue is the day-to-day stuff. So every day people get paid. Every day people buy stuff. They get charged VAT. Okay, this is normal day-to-day stuff. That's current revenue. Really important to know the difference between current and the next one, which is capital revenue. And capital revenue is they can be one-off ones or ones they don't rely on for their normal day-to-day running of a company of the country, but something they may need to tap into. And the main thing is well, this is not the main one at all. It just came up first, as you do. The main one really is borrowing. Is where does the government get a lot of their money from at the moment that they borrow, and they borrow from the financial markets, and they borrow predominantly using this thing called bonds, the bond market. I've spoken about the bond market before. If you have any questions, please ask me. I'm not going to go through it now. They do also get grants and loans from the European Union, for instance. So we've got a huge amount of grants from the European Union since we joined in 1972, I think it was. Okay, and state-owned property. So, for instance, if the state sells some land, they get it. Now, the state still owns a lot of land. They own Quilcha, which owns 7% of the land in this country. So, if they decide to sell it, they'll get a lot of money. That's revenue. Where do they spend their money? Again, same thing. Current expenditure, capital expenditure. Current expenditure being the day-to-day stuff. Okay, my salary, people's social welfare payments, and again, that's the bulk of where they spend their money. I'm going to show you a little chart now for a second. And then the capital stuff is not the day-to-day. So again, these are the kind of the one-off ones. You would have done this in business studies as well. The one-off expenditure. So this is the roads, the hospitals. This is the big stuff. Okay. And again, this is kind of the infrastructural stuff. Okay, so the National Children's Hospital, for instance, is costing in excess of €1 billion. That's a capital expenditure. The rollout of the national broadband plan is going to cost in excess of €1 billion. It's costing a lot of money. They're not day to day. These are one-off things that they hope they won't have to do it again. Okay, so what you need to do really is you need to balance these. I'm just going to knock this off for a second and come in here. This is budget 2021. This is just where we are with the budget. And there's this one thing here I wanted to see. Where was it? Oh, is it down here somewhere? I can't remember. Nope, I think it was the top one here. Oh yeah, balance the budget. No, it was down. It was this one here. Oh yeah, there's government spending. There's government revenue. So money in versus money out, and you can see it really that they were spending way much more than they were earning until the kind of books balanced about here. And now, again, since COVID, you can see kind of COVID, well, 2019 is kind of Brexit, COVID contingency, the spending has gone way up. And you can see the spending there is like 52 billion and the revenue is 42 billion. So 52 billion, 42 billion, that's a massive hole. So again, you're talking a 10 billion hole really in our public finances. Okay. So generally, if you have more money than less, you have a surplus. If you have less money coming in than you going out, it is a deficit. And this is and you need to differentiate between the current account and the exchequer balance. Day-to-day activities in the government, so just normal spending, and main spending again is on teacher salaries and social welfare, and main money coming in is through PAYE and VAT and corporation tax. Okay, that's the surplus or deficit on the current account. The exchequer balance is just a total. What is all the money coming into the government? What is all the money going out in the government? And what is the difference? Okay, and you want both of those to be positive, but not too positive. Okay, so these are other things, all right, you need to know. You need to know what the government will generally, because this is a plan for the following year, the government will say, well, we know we're going to run a government budget deficit. We know we're going to run a budget surplus. So, for example, right now, the government have said 2 months ago into the budget, they said, we know there's going to be an €18 billion hole in the government accounts. We know that's the case because they're going to spend too much more on COVID. So they generally plan for this. They're going to plan for current budget deficit or a surplus or a balanced one. Okay. There's also this thing called an inflationary budget or deflationary budget or a neutral budget. And you can see it there. Revenue expenditure is increasing or taxation is decreasing, which means, and again, deflationary revenue expenditure is decreasing or taxation is increasing. So spending going out, down or up, taxation going up or down, and this they kind of know kind of the trends that this way is going. You can see it there. This is just something I pulled there from the CSO. So this is 2019. This is the 2019 spending and income, and you can see it there. Like, I mean, it's pretty straightforward. You have 64 billion in taxes that they took in 2019. Okay, 64 billion in taxes, normal taxes. So the bulk of their money, and this is the current account, by the way, is just coming in taxes. You look at expenditure, over a third of it there is going on social welfare. So the dole, pensions, carers allowance, etc. Compensation of employees is paying teachers and guards and nurses their salaries. And you can see the other there, interest, for instance, like we pay 5 billion in interest every year on our bonds. Again, bonds are not free. You have to pay interest on these things, depreciation of state things, and then there's other stuff in there as well. Okay. How can government spending affect our daily lives? I mean, they just everything. Like, what does the government do with the money? Like, what do they do with the money? They pay us, they build stuff, and they invest in our future. Okay, you should be able to talk about this, and you should be able to use loads of examples. So just look around the country, see what's been built in the last 5 years, or the last 2 or 3 years that you remember. So I mean, you look at, for instance, this is Terminal 2 in Dublin Airport. That's been built in the last 10 years. Okay, you look at the schools they built in Galway City. Some of them have only been built in the last 5 years. Okay, etc. Okay, these are generally questions. I'm going to run through these really quickly. Generally, this is the question that they will ask you in an exam about government budgets. So, what can the government do if they have a surplus, or what can the government do if they have a deficit? That's essentially it. I've gone through most of the questions, or I've had a look at most of the questions. That's essentially it. I mean, they'll ask you what's a government surplus, what's a government deficit, but this is the main question. So, if the government has a budget deficit, what would they do? Now, if I was in class, I would pause here, and you'd all have time to go off and think about it. So let's just melt through it. They would increase taxes. Increased taxes mean people have to pay more taxes, which means your deficit is going to fall. Direct taxes, so there's direct tax and indirect taxes. Okay, reduce numbers employed in the public sector, so they could just fire some teachers, fire some guards, fire some nurses, and they wouldn't have to pay them. So yeah, saving money. They could cut wages in the public sector, which is what they did in 2008. They just cut away teacher salaries by 20%. Oh, we know money, so we're just going to cut your wages by 20%. What are we going to do? Go on strike? Well, we could. Scale back on big services, so just scale back on vital infrastructure. We're going to look at this in a bit of detail later on, by the way. And then the other one is, what can they do if there's a government surplus? Generally, this is politics, and this is again coming back to the type of government we have, the type of country we have, the type of economic system we have, and most importantly, the type of economic theory that we follow. Okay, different countries have different approaches to this, but generally, if the Irish government, and historically, if the Irish government has got tons of money, what they'll do is they'll give us all a tax break. They'll say, "Hey, you're doing amazing things, so we're going to cut the tax from 42% to 39%, and then everyone's got more money, and then confidence booms, and yay, we've loads more money in our pocket, so we spend it." And they hire more guards, they hire more nurses, they hire more teachers. Okay, and then they spend roads, hospitals, the usual, and they can decrease the national debt. So, our Minister for Finance is always a big fan of the rainy day fund, and if we have a little bit left over, we'll put it in the piggy bank to pay off our national debt, as you do. And a balanced current budget is, so if there's a budget surplus or budget deficit, you can do something about that. And a balanced budget is just where generally one equals the other. They're never going to equal each other to the euro, or even to the million. But if they're close enough, if they're within, like, honestly, if they're within like 300 or 500 million, you'd nearly consider it a balanced budget. Last thing then is this thing called fiscal drag. Okay, I have 1 minute and 7 seconds left, so you can pause it here, have a look at it yourself. This is just one of these weird questions that could pop up in a short answer there. You can kind of read it there as well. The problem here is just, if you make a plan for the year, something changes, you're kind of stuck with the plan for the year. So if there's loads of money coming in, you're like, well, I can't really do anything with this money because it's all been allocated for. So if the government gets a massive windfall, for instance, in June, they're like, well, we can't spend the money because it's all been allocated. All the accounts, all the plans have been drawn up. So it's called a fiscal drag. Oh, I have 34 seconds left. Wow. I sped through that. Anyway, Shine, end of session 1. I will have some questions as an assignment momentarily. Cheerio.